If you're thinking about moving, this news is huge. Housing inventory has hit its peak in over a decade for a ton of markets. And I'm sure it's gonna have you wondering if it's even the right decision to move this year or even in a couple of months after that. But don't you worry, because we're gonna tell you exactly what's gonna happen and what you should do regarding your next move. In this video, we're gonna talk about this past month in real estate. We're gonna talk about our housing inventory problem and what that actually means for us. We're gonna compare a couple of different markets that have different types of inventory just to kind of see where things are trending. And be sure to stick around to the end because we found an insane clue that's gonna tell you exactly what you should do regarding your next move. First, I wanna talk about this past month when it comes to the Houston real estate market. And this is the headline. Houston housing inventory hits its highest level in a decade as home sales slow in August. So housing inventory hit from 3.2 months of supply to 4.5 months of supply, which is the highest since September 2012. You can see that it is a 1.3 month change year over year from this same time August. So we are really trending towards a market where we're having a lot more supply and a lot more months of inventory. On top of that, you can see that our total property sales are down 11.2%, and there are a ton more listings on the market. We've got 48,000 compared to 37,000. That's nearly a 30% increase in active listings. So we're in a place where all the numbers are pointing where it seems like we are heading towards a buyer's market. Prices might start to drop down. I always like to share this right here. These are going to be some of the leading indicators that we like to use to just kind of see where our market is actually moving. So the first thing that we like to take a look at are new listings. How many new listings are hitting the market? And what we see here, we can compare it to 2023 and 2024 just to kind of see where we're trending. Right here, the black line, you've got the trend, of course. Real estate is pretty seasonal, so a lot of people like to list their houses in that spring summer time frame, and things typically like to go down, right? You see this orange line, this is 2023. After the peak summertime, things start to slow down when it comes to more people putting their houses on the market. But this is the really interesting thing when it comes to this past month. You'll see here that things did slow down, but we have new listings just shoot back up. So more people this past month just decided to list their houses. So that's probably one of the reasons why we're seeing a larger inventory and the peak inventory we've had since 2012, because we just have more listings hitting the market. So just more people wanting to make that move now. Now, this is when it comes to the supply. Let's talk a little bit about the demand. And you're not going to find a lot of these stats anywhere else. So right here, our market shows the amount of showings in the market. And you'll see here, again, orange line, we have a lot of showings happen, and then things start to slow down. Right here, the black line, which is pretty interesting, is we see that similar trend, but August we see just a little bit of an uptick. Honestly, it's a nice uptick because it kind of offsets that we have a ton of listings on the market, but it's definitely not enough to completely offset how many more houses we have in the market. So depends on how things are going to go. If we just start to see showing still kind of cross that line right over here in this past month, so we'll kind of see what those numbers look like next month. But it still is showing, we're in a place that it seems like there's still a little bit less people looking at properties, especially if we're talking about the same amount of showings as this same time last year, but our active inventory is nearly 11,000, or actually it's right around 11,000 more houses on the market. Next thing that we've got right here, we've got the listing views. So this is to also show demand because a lot of people kind of start their search online. So when there's more listing views, it just means there's just a bit more interest in our market here. Let's start with the orange line, which is 2023. You see that uptick in views right here. So yes, uptick in views when it comes to the summer. And then it starts to drop down a little bit August, September, October, November, December, right? So it tails off in the end of the year. But this is the scariest thing that I kind of saw right here. So the black line is going to be this year. So again, typical uptick. But from July to August, it just tanks. I mean, there are less people looking at houses here than right before March, right? So for January, February is probably our typically slowest time, and it's down there. So this is scary because it looks like the demand is slowing down, the inventory is coming up. So it begs a question. I mean, where are prices going to go? What are you going to do? But before we talk about that, if you're new here, my name is RK Rosas with the Community Warriors Real Estate Team, and we've sold hundreds of houses here in the Houston area. I've lived here for nearly 30 years, and we've helped countless people make the best decision when it comes to the timing of their next move. And even if you're not here in the Houston market, what we're talking about today is going to apply to a ton of people and a ton of different markets. So stick around for the full video. I actually want to talk about what I mean when I say months of inventory. Months of inventory right here is a metric that we like to track. A lot of people think that it just means the amount of houses that are on the market, but it's actually going to be the correlation between supply and demand. And so I've got a description right here when it comes to it. And the months of inventory seeks to quantify how many months it would take the market to absorb the entire active inventory. Right here, it talks about the relationship between supply and demand in a housing market. So just to kind of put it in layman's terms, it just means if, let's go back to these right here. If no more houses go in the market, but the current demand stands, that is how long it will take to sell every single house. So we have 48,774 active listings, and we have about 8,700 sales per month. With those numbers, it would take 4.5 months to sell every single house on the market. The reason why this is important is because this number has been tracked for quite some time, and you'll be able to see the type of market that we're in based on where this indicator and this metric is. So there's two types of market. There is a seller's market right here, a seller's market, and that's if it's anything less than 4 months of inventory. So anything less than 4 months. 4 months and under is a seller's market. And then we have a buyer's market if it's above 6 months of inventory. That means we are in a buyer's market. So buyers have more negotiating power. And it just means that prices may end up dropping a little bit. Whereas in a seller's market, prices may end up going up because sellers have more power. But there's this middle zone where we're in kind of a balanced market is what we call it. 4 to 6 months is a balanced market. And when you take a look at our market, let's say, 5 months is right in the middle, we are a balanced market, but leaning seller market, if you guys get what I'm saying. Balanced market, leaning seller's market. So technically speaking, we're still kind of in a seller's market. I mean, it's a balance, but that's why prices are likely staying around where they're at and honestly still climbing month over month in this area. Right now, if it were to stay the same, I would say our prices would still creep up or remain relatively flat. But to be able to really tell that, I wanted to share what a similar market to ours looks like, except that the inventory has it leaning more towards a buyer's market. And right here we have an article from the Housing Wire, and this is talking about the housing inventory. And there's 4 major markets here in Texas, if you guys know. Obviously, we have the Dallas market, we have the Austin market, we have the San Antonio market, and we have our Houston market. And right here, we can kind of see that Dallas was more of a seller's market, so they're a little under us. Austin, we have a very similar story to us. They're 4.8, so a little bit closer to us. But San Antonio is actually the only market that we have here that is above 5. So it's the only market that is in a balanced market, but leaning buy side. So I wanted to see where that compares us, right? Just to see if there's any difference on where the prices are moving or have started to move. And what I have here is I've got kind of the median sold price. This is from Rocket Homes, their data. I've got the median sold price of your average 3-bedroom house in San Antonio. We have that from March. We've got the average price, median price going from $267.9. We got $268, so going up a little bit. We have $267 or $266.7, going down to $265. Flat at $265, and then just a little under $265. So you can see we're on a, it's a balanced kind of flat market, but it's it's making its way down just a little bit, just a little bit. I wanted to compare that with the Houston market so you guys can kind of see that despite us all kind of being flat in most Texas markets, you'll see the difference, and you'll see it right here. So we've got Houston, how it compares, and they're very similar, right? These are the only markets that we have the median sales prices in the 200s compared to Dallas and Austin, which are going to be a bit higher. Right here, we have Houston at 290, Houston at 291, so they're kind of following the same trend where they're going up just a little bit, and Houston 291.5, but this is the first time that San Antonio starts to go down. So 268 to 266.7, but we go up just a little bit. San Antonio still is going down from May to June, except Houston starts to go up still, just a little under 1,000. And then July, we have again another uptick, and this is a bigger one. This is about a 3,000 uptick where San Antonio remains pretty flat. And then Houston again makes another 1,000 uptick, and San Antonio just goes down, remains relatively flat. So this is where you can see the little minor differences when it comes to a balanced market. So if we get really granular about it, Houston is 4.5, leaning seller side, and you'll see little minor jumps up every single month in the median price. Or in San Antonio, you see minor drops down just because it's more leaning buyer side despite both being balanced. You'll see here from the top, from 6 months ago, we have San Antonio at 267.9, so just about 268, and then right now it's at 265. So that's about a $3,000 decrease in value and purchase price for any house. Right here from Houston we have 290, and right now it's at 296, so that's about a $6,000 increase in price. So what are prices going to do in Houston? Likely, it might follow the same trend if we stay in this line of under 5 months inventory. But, I mean, are we going to stay under that line? It really just depends on a lot of factors. And we're going to talk about that in just a bit. Because here we believe that history leaves clues. So I wanted to go back to the actual time that we had inventory right around this point, maybe to see if we can kind of paint a picture of where we're going to be moving. And that was September 2012, as you guys can see here. We were at the highest inventory since September 2012. So I got the stats right here. We've got inventory right over here. Months of inventory at 4.7 in September 2012. And there's a very big correlation to inventory being at this point, because, okay, we have months of inventory at 4.7 right here. This was very close to the election time, so September 2012, election year, same thing as right now. We are in an election year, and wanted to take a look at this right here. Comparing these two, this right here are two side-by-side comparison charts of where the mortgage rates were at a time from the beginning of that year all the way to the end of that year. Unless you look at the numbers, they look nearly identical in how they're trending, right? The left side is actually going to be this past year with the mortgage rates, where the right side is going to be 2012 when it comes to mortgage rates. So you'll see here in that election year, we had that kind of uptick in rates all the way up in kind of that spring summertime, and then they start to creep their way down in 2012 all the way to nearly the lowest point. Actually, it is the lowest point on this chart, in all the way into September, right? You see the exact same thing all the way into September. It drops down in 2012, and right now you see the exact same thing when it comes to right now. Where is months of inventory moving? We see here September goes into October. We have the months of inventory dropping a little bit, 4.7 to 4.4. From 4.7 to 4.4, we have 4.1 into November. From 4.1, that's kind of the election year. Let's look at December. In December, we have 3.7. So December in 2012, it marks the first month in that kind of peak. In December 2012, this is their first break into a seller's market. So we may be trending closely towards something like that. Let's take a look heading into the next couple of months, right? So heading into the next year, we have January goes down to 3.6 months of inventory. So even more of a seller's market. Not too much, but we're trending that way. 3.6 again in February. And then lastly, we have in March, we're at 3.5 months of inventory. So firmly into seller's market territory is where it ended up landing post-election, post-lowered interest rates. And honestly, when we start to look at things, we might end up being there too. Now, before we talk to you about what you should be doing regarding your move, I wanted to go into this last thing right here. This is going to be the interest rates, this is going to be the mortgage rates. So this is going to pan out all the way up until March 2013. So maybe if it follows the same trend, it might be a very similar story for 2025. Right here, we have our lowest point right before the election, very similar to where we're at now. We have it right there. Into December, November, December, we hit even lower. Nothing too crazy, but it is a lower point. And then you just start to see in these next couple of months after that, it ticks back up again as we head more into a seller's market, not just in Houston, but across the board for a lot of markets at that time. So now, what does this mean for you? Prices in Houston look to continue to rise unless more homes sit. And honestly, when I take a look at the mortgage rates staying relatively low here, it's likely that this is not going to happen. So you take a look at the mortgage rates, you take a look at the trends of where this market moved from their 4.7 months of inventory all the way into March. You see that land into 3.5. It's really likely that prices are going to go up. Let's even compare it to this right here. You've got the average price in March of 2013 being $236, whereas the average price being $221 in September. So that's about a $16,000 swing. And when you look at our market average, it's going to be $421. I mean, if we were following the numbers, that's $40,000 swing maybe in the next 6 months here. With everything in mind, you might have your best window to save on a move within these next couple of months. I mean, just think about it. You've got the lowest interest rates that you've ever seen in the past 2 years. You've got the highest inventory that you've ever seen in the past 12 years, here in Houston at least. It's kind of the perfect place to make that move. Well, if you wanted to wait to sell, of course, you'd probably have to buy another house. That's going to cost you a little bit more. But luckily for you, if you were going to wait or wanted to wait, then you would have a little bit of built up equity just because you're going to have that swing in price going up for you. So you'll have a little bit more to put down, whether it be buying additional points or just putting more down on the house. Whatever decision that you're looking to make, we are happy to talk about it because every single person's situation is different. So just click the link down below in the description and we can definitely talk about what is the best game plan for you, like we've helped hundreds of people do the same. Now, with the election around the corner, around the time that this video was coming out, I'm sure you're wondering, what's going to happen if this candidate wins or what's going to happen if the other candidate wins? Well, that's why we made an exact video talking about that. So we'll catch you in that one next.